Welcome back to Investment Talk Podcast. You know, there are some stocks that really keep you on the edge of your seat. And Robinhood Markets, ticker symbol HOOD, is definitely one of them. It's been making some pretty interesting moves lately. And we're here to break down what's really going on, what's driving its recent performance, and ultimately whether it might be a good investment opportunity for you right now.
Yeah, what's really interesting about HOD is how it's bucking some of the broader market trends. We've seen a lot of volatility in the market lately, but this stock has managed to climb pretty steadily, and it's even approaching its 52-week highs.
So let's talk about that recent price surge. HOOD closed at $65.28, up more than 3% from the previous day. And this isn't just a random blip, it's part of a larger upward trend. For anyone who's been following this company, it's had its ups and downs. But this recent climb is certainly catching attention. What do you make of this, looking at the technical indicators?
Well, HOD is currently trading significantly above both its 50-day and 200-day moving averages, which are sitting at $45.32 and $28.78 respectively. And what that tells us is that the stock is demonstrating some serious momentum, suggesting that this upward trend could continue. And it's not just the price either. The trading volume has been significantly higher than usual, reaching almost 39 million shares compared to its average of around 24 million. So this increased activity points to strong investor interest. People are definitely paying attention to HOD right now.
So something's attracting investors to HOD, but what is it exactly? Let's dive into the factors that might be driving this growth.
One key factor is their stellar performance in the last quarter of 2024. They reported record revenue hitting $1 billion, with a significant portion of that growth fueled by a surge in cryptocurrency transactions. We're talking almost a 500% jump in revenue from that segment alone.
That focus on cryptocurrency is interesting. It seems to align well with Robinhood's reputation for attracting younger investors, doesn't it?
Absolutely. And that momentum continued into January 2025 with some pretty impressive operating data. They added 2 million new funded customers, reaching a total of over 25 million. And their assets under custody practically doubled year over year, reaching a massive $204 billion. Now, for those who might not be familiar with the term, assets under custody refers to the total value of assets that a financial institution holds for its clients. So this massive increase indicates a growing trust in Robinhood as a platform for managing investments.
That's a significant jump. It seems like people aren't just parking their money with Robinhood, they're actively trading too.
Exactly. Equity notional trading volume increased by a whopping 144% year over year, and crypto notional trading volume surged even higher, over 200%. Now, notional trading volume might sound a bit technical, but it essentially refers to the total value of trades being executed. So these numbers tell us there's a lot of action happening on the platform.
Okay, so on the surface, things are looking pretty good for HORD. But let's address the elephant in the room, the recent reports about insider selling. We've seen some significant sales, particularly by one director who's been steadily offloading shares since December 2024. That has to raise some eyebrows, right? Should investors be concerned?
Insider selling is always something to take note of, but it's not always a reason to panic. It's important to look at the context. Sometimes insider selling is simply part of an individual's personal financial planning, or a strategy to diversify their portfolio.
So how can we determine when insider selling is a red flag and when it's just business as usual?
Well, that's the tricky part. We need to look for patterns. Are multiple insiders selling large chunks of stock? Are they selling a significant portion of their holdings? And most importantly, are there other factors that might explain the selling? In Robinhood's case, we've seen strong company performance, and they have those ambitious plans for expansion, so this insider selling doesn't necessarily signal a lack of faith in the company's future.
That makes sense. It's all about looking at the bigger picture. Now let's talk about valuation. Robinhood's price-to-earnings ratio, or PE ratio, is currently sitting at 41.85. For our listeners who aren't as familiar with this metric, the PE ratio essentially tells us how much investors are willing to pay for every dollar of the company's earnings. Now, a PE ratio of 41.85 is quite high, especially compared to more established financial companies. So what does this tell us about how the market is valuing HOD right now?
Yeah, a high PE ratio like this often indicates high growth expectations. It means investors are banking on the company's earnings to grow significantly in the future, and they're willing to pay a premium for that potential growth. And it's not uncommon for growth stocks, particularly in the tech and fintech sectors, to have higher PE ratios. Think of it like this. Investors are essentially betting on the company's future, and they're willing to pay a higher price for a share of that future.
So is that a good thing or a bad thing? I mean, we've seen some pretty bold predictions out there with some analysts saying HOD could hit $100 by mid-2025 or even soar past $250 in a few years. But there are also those who are much more cautious, pointing to the already high valuation as a reason for concern, What's your perspective on this?
Well, it's important to remember that the market is inherently unpredictable. Even the most experienced analysts get it wrong sometimes. It's impossible to say for certain what the future holds for any stock, including HOOD. But what we can do is look at the range of possibilities, weigh the different factors that could influence the stock's trajectory, and make informed decisions based on our own risk tolerance and investment goals.
That's a really good point. So let's talk about some of those factors. One that comes to mind is competition. How does Robinhood stack up against its competitors in the financial technology space, like Coinbase, for example?
That's a key question. Coinbase is definitely a major player, especially in the cryptocurrency trading arena. However, Robinhood has a broader range of services, offering not just crypto, but also stocks, options, and even a cash management account. So this diversification could be a real advantage for them, particularly when it comes to attracting younger investors who are looking for a one-stop shop to manage their entire financial lives.
And it seems like Robinhood's user-friendly interface and its focus on accessibility have been very effective in attracting that younger demographic. They've really made investing seem less intimidating for a whole generation of new investors, haven't they?
Absolutely. Robinhood has played a significant role in democratizing finance, making investing more accessible to people who might have felt excluded from traditional financial institutions. And that's a powerful shift, and it's certainly contributed to their success.
But they've also faced their fair share of controversy, particularly around the gamification of investing. Some critics argue that their approach with features like confetti animations after trades might encourage risky behavior and downplay the seriousness of investing. What are your thoughts on that?
Well, that's a valid concern. Robinhood's mission to democratize finance has been both praised and criticized. While they've undoubtedly lowered barriers to entry and made investing more accessible, there are legitimate questions about whether they're doing enough to educate and protect inexperienced investors. It's a complex issue with no easy answers. Ultimately, it's up to each individual investor to decide whether Robinhood's approach aligns with their own investing philosophy and risk tolerance.
And on the financial front, their most recent earnings report actually fell short of analyst expectations. However, they attributed was miss to high customer acquisition costs, emphasizing that they're investing heavily in attracting new users. Do you think this is a justifiable explanation? Could this be a sign that future earnings will surprise to the upside if these investments pay off?
Well, that's a possibility worth considering. It all comes down to whether those new users become active traders and generate revenue for the company. It's a calculated risk, but high-growth companies often have to make these kinds of investments to scale their business. It's a balancing act between short-term costs and long-term potential.
So it's a bit of a gamble, but a potentially calculated one. It sounds like there are a lot of factors at play here, making HOOD a particularly interesting case study.
Absolutely. Robinhood is operating in a dynamic and rapidly evolving landscape. They've made a significant impact on the financial industry, but their future success will depend on their ability to navigate these complexities, address the criticisms, and continue to innovate. It'll be fascinating to see how their story unfolds.
All right, so we've covered a lot of ground here today. We've talked about Robinhood's impressive growth, their strong performance in key areas like crypto trading, their ambitious expansion plans, and their efforts to attract new users. But we've also acknowledged some potential concerns like the insider selling and the high valuation. So for someone who's listening to this and considering HOOD as a potential investment, what's the takeaway here?
Well, it really comes down to a classic risk versus reward scenario. Robinhood is a company with tremendous potential, but it also comes with a certain level of uncertainty. If you're an investor who's averse to risk, HOOD might not be the right fit for your portfolio. But if you're comfortable with a bit more volatility and you believe in their long-term growth strategy, then HOOD could be a very interesting addition to your investment mix.
So no easy answers, huh?
Yeah, investing rarely offers easy answers. It's all about carefully weighing the evidence, understanding the risks, and ultimately making informed decisions that align with your personal investment goals.
Very well said. It seems like Robinhood is really trying to change the game when it comes to investing. Whether they ultimately succeed or not, only time will tell, but their impact on the financial landscape is undeniable. They've opened up investing to a whole new audience, and that's a trend worth paying attention to.
I completely agree. It's a fascinating story that's still unfolding.
Well, this has been a great conversation. I really appreciate you taking the time to break down all of this for us today.
Oh, it was my pleasure. I always enjoy these discussions.
And for all of our listeners out there, thanks for tuning in to Investing Talk Podcast. Don't forget to subscribe, share this episode with anyone you think might find it valuable, and leave us a comment letting us know your thoughts on Robinhood Markets. We'd love to hear from you. Until next time, happy investing.